So, good morning. Today, I am going to talk about the setups that are happening now. So, when gold was trending in upside, that time, what gold was doing? Okay, let's flip this chart, then you can understand. So, when gold was trending up in the upside, it was trapping the sellers, then moving up like this, a kind of strong support. Then it fell, grabbed the liquidity, then it started to go up when gold was in very strong uptrend. But now gold is in strong downtrend. So now what is happening, as gold is in downtrend, so it is trapping the buyers instead of the sellers. So it is trapping the buyers. See, here it trapped the buyers, it went down. Then here was the trade that I took. So this is a horizontal liquidity. And another thing is, this trend line was not so perfect, but even though it was kind of respecting it and about to give breakout, but it didn't work. See, Tuesday either it will be upside or downside. Any one side there will be a momentum. That is the main problem. See, 7 p.m. So this happened, and here, see, these two setups, it was my mistake. There was no perfect head and shoulder or a breakout, even though, not even though, then also I took the trade. That was the main issue. This is left shoulder, head, and I thought this is a left shoulder, a right shoulder. The trend line was like this. So this was a breakout, then there was accumulation. Then I thought that if it is giving a breakout of this trend line, then it means it might go up till this retest area, but instead it shown that it will go up, but immediately it fell, and it fell a lot. And then comes this week, and gold, it is not forming proper setup also. That is the major issue with gold. See, this week there was no pure setup, only setup was like this, which is not very appropriate. And then the trade is over here. So you can see, let's withdraw, then you can see, understand it is a perfect setup. Still it didn't work. Left shoulder, let's take this middle as a head. So this is the right shoulder. So what I thought, it will come down and grab the liquidity, then it will move up, then this become the right shoulder. Okay, then here it is the completed of right shoulder. So when there is a breakout of this trend line, there is a high probability it will go, but instead it started to come down slowly. And another main thing, there was divergence in uh, euro pair. See, in euro USD it gave it so much bullish move at this time. At the same time, in euro there was bullish move, but in gold and silver it was between a range. See, it was between a range, means there is some sort of divergence. So I became kind of tired, so I left it. My SL was here, which I trailed till this area and exited many of my position. So I would say that you have traded very nicely. It was the part of game, but what can be done much better is if you have a separate account, because it means a separate account for trading two things. One is trap trading setups and another is your that's what it is called. One is trap and that is that Fibonacci. So for this you need two accounts. So Fibonacci you could have used, means funding pips you could have used and bought at this region and sold at the top, and you are done with the day, because one it's to 1.5 you have got, and leave the trade. And then when this was the liquidity grab, see this is the liquidity grab, you can clearly see that. So here was one thing that you should have put, means cut the position over here, because it has failed to give a proper breakout. Instead you held it, and most importantly, if one account was remaining for trap trading, then you could have shorted it. But as all the accounts were occupied, you could not short the market. And also not only here, you could have shorted over here also. See, given a breakout, this is a strong support. It is closing below the strong support. So when the green candle was turning red, that time you could have opened a short over here and target this liquidity 1 to 1.2 or 1.38. So that was a good thing. And another thing is, this was not a proper setup. See, it was Fibonacci. Chart pattern was not there. Proper pattern was not there. Only candlestick, means here it is that number one is liquidity. Number two is the failure of the general setup. Number three is going with the trend. So, and also number four, there is a breakdown of the trend line. So you could have easily gotten 1:3. See, trap setup you can easily get 1:3. This is the main problem. When you are biased and busy with trading simply, market just does the opposite. And what I was trying to do was, I was trading what I was thinking, not what I was seeing. Accumulated whole day means there is a divergence, and I could feel that energy, that there is something wrong with gold in the buy direction, because it was not moving even though euro was moving. See, this is the things you should note down. That's all for this trap trading thing. So let's review what I said. So Number one is having a separate account. Having a separate account, and then number two is mm, mentally prepared. Take the trade without and another thing I want to say, that is mm, cut position and another thing is hmm, this one is the most important. This will be the star. So where does the trap set up mostly appears? So, so where does the trap setup mostly appears? This. So now I will discuss all this thing. So first discuss where does the trap setup mostly appears. So most of them appears like in this kind of situation. Even though here, see what is happening with the market. Here market fell with a very strength. Means what? Means there is a huge dominance of the sellers. Okay, it is very good. Then what I general public is expecting, they are expecting it to reverse. So it could have formed a double bottom pattern or a appropriate head and shoulder pattern. The head and shoulder pattern you have seen over here. So there was a breakout along with a good kind of volume, not too much but kind of appropriate volume, because it is forming at the end of Asian session. So session is not that important, but you can see it gave a breakout, it didn't sustain, that is also okay. Mm, but the most important thing is it fell down, it formed a reversal pattern, it gave a reverse. So reversal pattern formed, then it will go up. Means the new traders or the simple traders, they will wait till the target of these areas and also to fill the fair value gaps. But instead of that, what market makers or the trap traders will do is give a breakout, then they would sustain at that level. Like one is over here. Okay, even if this pattern is not valid at this trend, so if you are making a valid of this trend line, okay, so it went up, it will grab all the liquidities, then it will fall. It grabbed all the liquidities. Here two scenarios could have been made. See, this is a from bearish side to it is bullish side, all so here two kind of things might happen. So this is in 15 minutes. Let's go to 5 minutes. So see, this is what I am trying to say. So a huge bar gives a breakout with a volume. See the volume, it was a huge volume, but that is not a genuine volume. It gave a breakout within the next candle. So with it means I want to say is within 3 candles that you have made a rule that if the next 3 candles cover the whole length of this candle. See, one candle it is green, then again one candle, two candles. In 2 candles it covered this whole candle. Then there comes the fourth candle. So in 15 minutes if this form, then in 1 hour it will show a bearish doji candle. That is the thing I am trying to say. It gives a breakout, then immediately within 3 candles it completely engulfs the candle. So what happens? There forms a strong reversal means doji candle. So here all the buyers got trapped. Those who have exited, and then there is the breakdown of this trend line. So you could have entered over here keeping a stop loss over there, and 1:3 is fulfilled. See why another thing is why this gave a 1:3, but this one didn't give. This one also a proper trend line breakout, right? And also it sustained above that line. But the thing is, there is not another pattern over here. Like this trend line, there is no trend line over here, or also there is no proper pattern. But as you can see over here, so you can see there is a formation of kind of wedge pattern. So wedge pattern got activated, that is why you get 1:3. 1:3 why? There is a general setup kind of this. Then there is um, a trap setup. So two setups are there. This is not trade injected, but this is general setup with activation of trap setup. So this went dismal down. And another thing, when see as per rules, you have said to yourself that you will not trade against the 200. So 200 was very above this. So if there is a close above the 200, then you could assure that it will go up, but it is below 200, so there is a high tendency that it will fall. So here the main thing is you did two mistakes, that is trading against the trade, and when this trade was forming means you held onto the bias that it will come down, but see, it is forming a 100 candle pattern. So here was the setup you didn't see, that is why you missed it.